Welcome to The Real Money Show, the number 18778 Silver, the website guildhallwealth.com. My name is Jeremy Wiseman. I'm joined by Jerry Correia. It has been another exciting week in the precious metals market. It's been hot, and not just because Bloomberg calls it a safe haven, and not just because the IMF is all of a sudden pro-gold, and it's not because, you know, China's purchased $19 billion worth of it in the last year and a half.
Can't be.
Whole set of circumstances, as ChatGPT would say. It's never just one factor. And I got to tell everyone about I had an argument with ChatGPT about the gold standard, which I won. So stay tuned for that. The number 18778 Silver and the website guildhallwealth.com. Jerry, how you doing?
Amazing, Jeremy. The week that was, so we were all waiting for the FOMC this week. Wednesday, they spoke, and it was a lot of heat, Jeremy. A lot of hot air coming from those Fed members. Jawbone Powell, as he loves to do, is talk a lot of hot air. The Federal Reserve said this week that higher rates and for longer, and we may even see a hike coming up, that their fight on inflation is very pesky and they got to keep this fight on. That's all they can do, Jeremy, is a lot of hot air and jawboning. They have two jobs. They have Federal Reserve, which is the U.S. Central Bank. Now, we all have central banks, which is one of the planks of the Communist Manifesto, Karl Marx's Communist Manifesto, by the way. They're saying they may have another rate hike coming up.
Someone's been studying this week.
Well, always ready, always have to be sharp. They're saying higher for longer, but just a reminder, the Federal Reserve has two jobs, a dual mandate to keep employment up, which is a massive failure, as well as keeping the dollar value high and keep the dollar valuable. It's losing on both fronts. All they have to do is continue their hot air. Mind you, the economy is not driven anymore by the fundamentals. We're not driven by retail sales or, consumer sentiment and industrial production. Out the door. The stuff that you learned in school, it's about a speech on a podium. This is how wild and speculative this market has become. And as a result, safe havens have become the go-to. The safe haven has become the headline of the week. As Jeremy mentioned earlier, Bloomberg's safe haven of choice is gold. The U.S. Treasuries lose their edge. For decades, the U.S. Treasuries have outperformed gold as a safe haven. However, this trend is shifting due to the growing debt concerns. While bonds have traditionally been favored for their steady income and backing by the U.S. economy, recent years have seen declining returns. And in contrast, gold valued as a scarce commodity, money, and inflation hedge has seen a 15% gain this year, and that's it. And private wealth management, Crescent Capital, says a bubble is possible. So keep an eye out for signs of trouble. And that's exactly it. Going back to the Fed, Jeremy, when the bubble pops and when that black swan appears, the Fed will not just have to cut. They will have to slash rates. Despite that, despite the little decline in gold and silver this week, silver is still up 27% on the year and gold is still up 13% in the year. So dip in. The water's still great. The silver squeeze is still on, Jeremy.
And the number 18778 Silver, the website guildhallwealth.com, if you want to acquire some physical precious metals, whether that's for personal use, storing on your own, whether you want to store it in a vault facility for ease of liquidity, and or you could put it into a registered account where it's held outside the banking system, but still within your registered account. So it's an asset that you own directly, no counterparty risk. Now, Jerry, correct me if I'm wrong, but didn't Congress put forth a bill to get rid of the Fed this week?
That was last week. Massey, he tabled that bill, and it's creating rounds of conversation, and that's all that has to happen. The bill is just a seed. Right. And as we talk about and discuss it, we just continue to water that seed and we'll continue to grow in popularity. So we're going to be seeing that topic being escalated, even talking about it at the dinner table maybe this week. And this is what we have to see, a bill being passed.
So there's a bill passed to basically take away their mandate of being. So that means getting rid of the central bank altogether. And that is while Jerome Powell talks about raising rates and business as usual.
And it was interesting how that bill was tabled a week after the Trump team said that President Trump is going to be on the board of the Federal Reserve to restructure the Federal Reserve. So it was a back-to-back, a big 1-2 punch against the Fed. How more can you show how important, how relevant you still are by talking about interest rate hikes? It's ridiculous. It's a big show, hot air balloon, the Federal Reserve.
Yeah, and ultimately they had another strike against them this week as well, because there was another bill passed about central bank digital currencies. This was a huge win this week.
Yeah, that is definitely a huge win against the Washington D.C., the clown capital of the world. The U.S. House passes a bill banning Federal Reserve from issuing a CBDC, the Central Bank Digital Currency, which many of our heroes, many of our freedom lovers, we're moving in the right direction, but they're constantly fearful about this issuance of CBDC, which would be detrimental. You don't want to have that, a centralized crypto, a fiat cryptocurrency issued by the government. That's total control, right? But this is it. The U.S. House passes the bill. The U.S. House of Representatives voted largely along party lines to prevent the Federal Reserve from issuing a central bank digital currency. The CBDC Anti-Surveillance State Act, introduced by Majority Whip Tom Emmer out of Minnesota, seeks to block the U.S. central bank from continuing efforts toward the development of a digital dollar. Republicans expressed concerns that a CBDC could be used to control Americans.
It's fantastic to see this, because everyone should check out Yuval Harari from the World Economic Forum talking about Bitcoin. He was recently had a post where he was talking about that Bitcoin is antitrust. He said, no, you have to have people have trust in your currency, and it just showed what a bobblehead he was, because essentially you're sitting there listening to him saying, yes, you're correct. People are buying Bitcoin because they don't trust the currency. They don't trust you. And you're just simply saying, oh, they should just trust us. Mm-hmm. They should just blindly follow us. And another interesting thing this week, because of our regular listeners to the show, would know that last week we were kind of making a little bit of a joke. You're saying, where's Klaus Schwab? Where is he? He's disappeared.
Oh.
Well, he popped up again this week.
He did.
He popped up again to disappear again. It's almost like he saw his shadow. But yeah, he has retired officially from the World Economic Forum, and he did so via letter, which I thought was different, because as we all know, the World Economic Forum people love to see themselves in video.
Don't they ever?
I thought for sure if he was going to step down from the World Economic Forum, it would be via video. Just kind of get on the screen one last time for everyone to see him. But no, he did it by letter.
No continuity plan.
He's in his late 80s. Doesn't seem to stop Biden. He's sharp as a tack, right? So he keeps going. Why Klaus Schwab is stepping down now? It actually makes no sense. I mean, Henry Kissinger didn't stop working till the very end. So I don't see why he's stepping down right now. I think it's a bit curious, but certainly that means that the World Economic Forum's strength, I think, is going to be questioned.
Yes.
That it's maybe not quite as strong as an entity as it was several years ago. And why is that? Because everybody knows.
Yes.
Everybody has found out about the World Economic Forum. It's the first question they want to ask of a politician if they're running, right? Are you a member? It's the first thing they ask now. Yeah. What was their attendance like last year or the year before? It keeps going down because, none of them want to be attacked by rebel news on the street. They can't walk the streets anymore. And so the question becomes, how much importance do they control? When I say importance control, how much do they control things anymore? How much power do they wield? And when you see a Congress putting forth a bill of getting rid of CBDCs, you go, I think we're winning.
Even more. There's a constant domino effect happening. This is a systemic, one after the other, win after win after win. And it's just a massive stepping down. We're now seeing talks of, bank failures and HSBC CEO leaving abruptly. And there's even chatter about JP Morgan's Diamond potentially leaving. This is a huge victory. These bills that are being passed, the exposure, the darkness cannot dwell in the light, and we are gaining momentum. The momentum towards regaining control of our money, the system that was for the people, and the powers that be. Again, they don't like the light, the exposure that they're getting from we the people through all of these. How many other forms of media do we have now that is exposing this? And we're retweeting, or we're passing the news, and even listeners like yourself tuning into the Real Money Show week after week. We appreciate what you're doing, and spread the news, because here at Guildhall, we're all about getting real money in your portfolio, and a reminder what real money is. Not what Bloomberg says. It's not just a commodity, Jeremy. It has an element, and it has been money for thousands of years. If you convert or translate the word silver in 14 different languages, it means money. It means silver house in Chinese. The word bank in Chinese means silver house. I wonder why. Because money has 5 characteristics. And if you don't have this in your wallet or your portfolio or the vault, you don't have money. Money must be scarce, recognizable, durable, divisible, and portable. Real money on the Real Money Show.
And a store of value.
And a store of value, exactly.
The number 18778-SILVER and the website guildhallwealth.com. You can order physical precious metals through our website at guildhallpreciousmetals.com. You can pick up a tube of maples, an ounce of gold, get started, get your feet wet, understand the pricing, understand what it feels like to have physical gold in your hand for the first time. And then you can move up. You can say, okay, I want to get more in my portfolio. I want some physical product in the vault for ease of liquidity. Make sure it's insured. I don't have to worry about theft. Or you could put it into a registered account like a TFSA, a LIRA, a LIF, a RIF, an RESP, or a first-time home buyer's plan. There's all different ways to own actual physical precious metals in your portfolio. Give us a call. We'll show you how to do it. More coming up on The Real Money Show. Again, the number 18778-SILVER, website guildhallwealth.com. More to come on 640 Toronto. Welcome back to The Real Money Show. The number 18778-SILVER and the website guildhallwealth.com. What a week. Precious metals were up. They had a bit of a pullback, but again, we're holding above $30 on silver. It's had an incredible year already, up, I think, over 30%. Gold is doing quite well. A lot of people, Jerry, I know we want to get back into the discussion on what real money is and some of the things to watch out for going forward, but I noticed a lot of people this week didn't know what to look for when to sell. How do you know when gold or silver is at a top? How do you know when it's time to sell physical gold and silver? Some people would probably criticize us and say, well, it's always a good time for you guys. You're always going to want people to buy, which is actually not true. If you were to speak to any one of our clients, they will tell you, we admit to everyone that at some point we expect most people will probably sell off 2/3 or 3/4 of their entire position. Not all of it, because at the end of the day, they're going to realize that it's important to hold real money in a portfolio of maybe 10, 15%. Maybe they'll decide they want a little bit more. But when gold and silver is tripled or quadrupled or quintupled, we'll get into that discussion right now, at some point you're going to want to sell a whole bunch because the purchasing power is so strong. But silver breaking over 30 perked people's ears up. Gold's moves recently has perked people's ears up. They're paying attention and they're thinking, I've waited a couple years for this to happen, and now's the time to take some profit. Is now the time to do that, Jerry? How do you know when to sell?
The silver to gold ratio. It's a very important measure of the relative gold and silver prices. When we're seeing such topside move on silver, especially last week when we thrusted right up to $32, it was too much of an acceleration for me. I knew there was going to be a pullback.
It was stressful for me personally.
So to avoid the stress, what you should be looking at is the measure. It's a very important measure, the silver to gold ratio. And what it does, it compares the amount of silver required to buy 1 ounce of gold. The silver to gold ratio is a very important metric that I consider when I decide to hold or invest, buy silver compared to gold. And by knowing the current, because this metric goes back thousands of years, so it's time tested, you can trust it, you can rest easy and breathe lightly. It's a popular rule of thumb is the 80-50, which suggests switching to silver when its value rises above 80 ounces. So right now we're about 77 to 1. Still relatively undervalued, silver is versus gold. The average, some will argue, would be around 30 to 1. So the idea would be to switch or have that conversation to switch from silver to gold when we get down to 50 to 1. Have that conversation with Guildhall. We're always ready to have that conversation, and we'll even recommend, let's have this conversation at 50.
Yeah, it's not a one-size-fits-all.
Absolutely not.
And any other criteria?
Just be mindful of the geopolitics and other fundamentals that we follow at Guildhall. The geopolitical landscape, that's always picking up, and these are reasons to find safe havens.
So, for example, if right now we're heading towards what many people think is a new financial system. And so once that has been established, a transition to a financial system, this isn't my thought, what's his name?
Neuenhuis.
He talks about that, and he's just one, but he wrote a book specifically about it. There's many people talking about that. I know Egon von Greyerz would say, yeah, I'm not going to sell my gold until we have a new system and I feel safe to sell my gold. Personally, I also look at value versus price. How many ounces of gold to buy stuff? Because gold, being a store of value, is the measuring stick. That's why having a gold standard or a gold backing gives you the ability to understand the value of things and make economic decisions. If I said to anybody that comes into the office, what's the value of the dollar? I don't know. It's something against the US dollar. Okay. What's the value of the US dollar? I don't really know. Okay. So we've got two boats tied to each other in the middle of an ocean at night without seeing stars. We have no idea where we are. Can't make an economic decision. By the way, they want it that way. It's by design. It's so that they can steal from you through inflation, through taxation. So where you don't know what the value of anything is, so all you see is that you're making money on your stock market portfolio, but you don't realize that you're not beating real world inflation. Oh, I'm up 7% this year. Okay, inflation's at 11%. Guess what? You're down 4%. Mm-hmm. So you have to understand the value of things. And gold, as you pointed out, since it's ancient, you can easily say how many ounces of gold to buy stuff, how many ounces of gold to buy a house, how many ounces of gold to buy the Dow Jones, which is the indices. In 1980, it hit 1 to 1. That was your peak. In 2011, it hit 4 to 1. In 1999, it was around 40 to 1. Today, it's probably around 16 to 1. So again, these ratios of understanding value, not price, is certainly another way. The other way to do it would be the percentage in your portfolio. Mm-hmm. And these are just examples, but there's certainly indicators that eventually get you to, well, is now the time.
Yeah.
Price is that final factor. Profit percentage is a final factor once you look at these. So the percentage of your portfolio factor could be, well, I'm going to start off at 20%. And if gold triples from here and the stock markets fall, which we're going to talk about in a moment, then maybe my percentage goes from 20 to 60%. Probably a good time to sell. Mm-hmm. Not based on price, but based on the percentage of value in my portfolio. Mm-hmm. And if the value of it drops and maybe all of a sudden it's gone down to 10%, maybe I should be buying more.
Yes.
So we want to take price out of the equation because price won't give you any balance. It won't indicate anything to you. It's exciting.
Certainly is.
But it's not the end all. So this is what we do with all our clients every day. We're trying to teach them the value of things to understand. And then finally, you can look at the percentage, the price, and then does that corroborate everything else you've learned and noticed and whatnot. If you want to get involved, if you want to get started, if you want to build up to that 10, 15%, you give us a call. The number 1-877-8-SILVER, the website guildhallwealth.com. And Jerry, let's talk about where did you want to go next?
I wanted to actually go back and just revisit Cresat. So we talked about a little bit of FOMC meeting that happened this week and a lot of hot air about rate hikes. which I don't believe will happen. I think they'll keep rates high as long as possible, and they'll begin cutting interest rates, especially what Egon von Greyer says. There's no safer place to be than gold and silver, which is why most of his clients, high net worth, are in gold and silver for liquidity, for decoupling their wealth away from all of the risks. And one of the risks that was brought up this week, it was a Reuters article that caught my attention, and it was a person by the name of Jack Ablin. Now, he's the CIO, the Chief Investment Officer, and founding partner at Cresat Private Wealth Management. And he was noted as saying this week that since the financial crisis, the U.S. fiscal and monetary policymakers have infused, as we know, unprecedented amount of paper, liquidity into the economy and the markets, with more than half of that thrown in since the pandemic, since the lockdowns. And this doesn't even include the stimulative effect of holding interest rates very, very low for over 12 years. And he says, we estimate that policy in effect chipped into the economy and markets over $1 trillion annually. This cavalcade of cheap cash helped grow the bubbles and fueled inflation to a level not seen in 40 years. And his recommendation is a bubble is possible, so keep an eye out for signs of trouble. When we look at how overvalued the stock market is, that is one. And when we have data from Kobesi letter this week, the stock concentration, the over-concentration of stocks, the top 10 companies' share in the S&P 500 index has reached a new record of 35%. 10 companies represent 35% of the S&P 5. This is the highest recorded percentage in over 50 years. It also now exceeds the 2000 dot-com bubble peak by 8 percentage points. Meanwhile, NVIDIA alone has contributed 30 to 39% of the S&P 500's market cap gain year to date. So we have overvaluation, over-concentration, and last week the Bank of Canada says overstretched. The banking system is overstretched. More banking failures will be seen. So where else would you put your wealth safely and surely, understanding that when we hear that the Bank of International Settlements, the bank of all central banks, recommends gold as a tier 1 capital. What is tier 1 capital? No risk, liquidity, and it can guarantee the debt. It can guarantee the financial system. This is why a gold standard is the only solution.
The number 18778 silver and the website guildhallwealth.com. Let's talk about the IMF. So first it starts with Zimbabwe. They backed their dollar with gold recently. They call it the ZIG, Zimbabwe Gold. And the IMF came out this week in favor of it. They basically said, we like it. We think it looks good. We think it's good for them. It's going to balance prices, all of these things. And so, of course, our community jumped on it, and they all said, well, we didn't expect that on our bingo card, that all of a sudden the IMF would be in favor of a gold standard, because that's in effect exactly what they have come out with. They're saying, oh, it's working over there. We support it. We are in favor of them using a gold standard. Well, you can't say, well, we like it for them, but not, it's good for them, but not for me. They basically have come out and said they're pro-gold standard.
Yeah, they have to be the International Monetary Fund.
It's pretty impressive. So when we kind of put all of that together, Zimbabwe being pro-gold, all of a sudden you've got trying to slam down CBDCs. You've got Congress trying to maybe even potentially take away the Fed's powers total. And then you start to look at of course, the bubble that you were talking about, that there could be any black swan event because of the concentration in the markets. And you start to see, what about China? What about all of the gold that they're purchasing? They purchased 225 tons in 2023. They're up to almost 30 tons so far this year in 2024. And that's 31,150 ounces of gold per ton. So just so you understand that's over almost 8.2 million ounces of gold, or a mere $19 billion worth of gold. The question is, what is that gold going to be worth to them over the next several years?
Interesting. It's interesting how the central banks around the world are de-dollarizing. The debts matter to these central banks. They should matter to us as well. And allocating into gold is the solution for what is coming down the pike. New records are being set. Speaking of China, last week or during the week, silver closed on the Shanghai Gold Exchange. All the while, we were worried about the U.S. dollar dip in gold. Mind you, the loonie was also losing its purchasing power. So it's really difficult for us Canadians to really capture the dip. But a new record was set. Now, silver closed yesterday. This was on May 22nd at $35.84 per ounce on the Shanghai Exchange.
Why? We're going to tell you in the next segment. Why is it trading so much higher in Shanghai than it is in America? The number 18778 silver, the website guildhallwealth.com. Get physical precious metals in your portfolio. We suggest starting with a direct purchase and then moving. You can look into something like a registered account where it's fully allocated, fully segregated, held in a vault facility, IROC approved, fully insured, outside the banking system, but still within your registered account. So why not use funds that you have in that account and profit off of this bull market? It's Guildhall Wealth. It's the Real Money Show on 640 Toronto. We'll be right back. Welcome back to the Real Money Show. The number 18778 silver and the website guildhallwealth.com. So Jerry, we're going to talk about how and why the price is higher in Shanghai than in North America, and someone put forth this theory, and it's too logical. It makes too much sense. So we all know that that's called arbitrage. So you take your cheaper metal here, you ship it to China, and you sell it at a higher price. You can make a lot of money. There's a book on silver that I have. I know the last name of the guy who wrote it was Silberman, and he talks about that in the 70s. They did that in the 70s. I think Scotiabank or whoever was first in the market that got taken over by Scotiabank, that they were doing a lot of this arbitrage, and they figured out how to make a lot of money. Okay, that's great. North America's making a lot of money on this arbitrage, but guess what's really happening? The physical product is getting moved from America to China, and it's leaving the Chinese exchange and into private hands. Where? Not back in America, but in China. They're willing to pay $4 more over spot price to get that physical product. And the trick is they're getting it into their country while you think you're making money.
That's it. That's the strategy. Arbitrage is the strategy. We were going over that. There's actually an arbitrage case study from Silver Academy that they put out this week. And it goes, how hard is it to fill a shipping container with silver? Not that difficult at all. The arbitrage is getting very lucrative. You could put 4,000 ounce bars into a very, very strong suitcase, which is about 70 cents to $1 over spot. Bring them to China and sell them, assuming at spot, and make $12,000 with just 4 1,000 ounce bars. Metals are moving from the west to east. If you put 10 suitcases now on a pallet, you can quickly make $120,000 in China. Very lucrative, and this is exactly what is happening. And the reason is, mind you, this is a country and this is a region around the world that is responsible for majority of the mining of this very important metal in photovoltaics, in electronics. They're doing all the work. The heavy lifting is being done there, yet the skullduggery that's happening in the Western pricing mechanism using paper. You create paper, you create artificial supply. If I created artificial supply of the housing market, the prices go down, right? And that's what they've been doing. And not only creating the paper, what do they do after that? They short it. They love selling the paper to the market. No one is buying that paper. No one is selling the paper. Meanwhile, as we're fixated on the U.S. price of gold and silver, that sucking sound is heading, silver is heading eastbound on that 401.
So I actually, before we talk about the ChatGPT thing, another thing that was interesting, it came out a couple weeks ago, but we kind of didn't pay attention to it, but I thought it would be interesting to talk about it today, which is that the Bureau of Labor Statistics announced that coffee prices will no longer be factored in the CPI inflation data.
Really?
Yeah, and I kind of, okay, I saw that. I thought it was kind of funny. We didn't bring it up on the show. That's
why
fine.
they drink the stuff every day.
Yeah, and then so I looked it up today, and of course, the Bureau of Labor Statistics on their X feed, they said, well, no, we didn't really do that. We changed, the packaging or blah, blah, blah. And no one bought what they were saying. According to LouDobbs.com, they did take it out. And what's interesting about that on its own is why. It's because over 73% of Americans drink coffee every day. And in April, they took coffee prices out of the inflation data. And it's because coffee is up 78% in the last year, according to the Kobesi letter, which we talk about a lot here. So this is something we have talked about for years on this show. You don't like the price of something for CPI? It's not giving you the data you want? Take it out, right? We're not going to use beef anymore. It's just going to be chicken. We're not going to use cars. We're going to say you're riding a bike to work. And so they manipulate the data. And to your point, what you said, I think it was last week or the week before, if you can manipulate the data so bad, then why don't you just bring inflation down and lower interest rates?
Right away.
So you can't have it both ways. And speaking of both ways, very quickly, I'll tell you about my argument with AI. It started with, I wanted to kind of understand $1 trillion and explain it to people. And, if you made $100,000 a day, it would take you over 27,000 years to earn $1 trillion, just so you get that one, right? So I was saying to ChatGPT, how do you pay off the debt? Could you revalue gold? I said, yeah, you could revalue gold, but there's a bunch of other factors, and it talked about global warming being a factor of debt. And I said, well, hold on a second. How is that? I mean, we adapt as humans. How does that explain population growth? And it said, well, it's true, we adapt, but it's still a factor. And I said, but that's an arbitrary factor. Could we also then say that miseducating people about economics allows them to accept what the Federal Reserve puts forth as economic policy because they don't know any better? And ChatGPT said, yes, that's true. That could definitely be a factor. Okay, so since we're throwing in arbitrary factors, we have to admit that global warming is an arbitrary factor. The answer was yes. Okay, so what about going back to a gold standard? Instantly, it went to the typical, well, here's the problems with the gold standard. You don't have flexibility. You can't borrow money as much. Da-da-da-da-da-da-da-da-da. So go through it one by one, and I said, well, a gold standard wouldn't stop people from being able to lend against it, just like you could borrow against your house or any other asset that you have. And then it was distribution, the idea of a gold standard being the rich people get gold, and then what are you left with? And I said, well, that could be solved with the bimetallic standard, which is what was originally in the United States, because that means people who aren't rich could get the cheaper metal. And then ChatGPT, after all of these things, said, well, yes, that's true. That would all work, but we have these two systems and you'd have to decide. And so I said, well, knowing which system, that there's both these systems and we have a historical reference for both, which one does the least damage?
Mm-hmm. What was the answer?
Well, I'll let you guys decide. The number, 18778-SILVER, the website, guildhallwealth.com. The answer was gold standard. Gold standard does the least amount of damage, using all of their examples of why you don't want to own gold. It was ridiculous.
Ladies and gentlemen, Jeremy beats AI.
Actually, it's not that hard. It's ChatGPT. The number, 18778-SILVER, the website, guildhallwealth.com. But my argument did work. Give us a call. We'll show you how to get involved in the physical gold and silver market. And I can show you the questions that I asked ChatGPT to make it concede that the gold standard was the best way to go. But we've got a little bit way to go on The Real Money Show, so stick with us. More to come on 640 Toronto. Welcome back to The Real Money Show. The number, 18778-SILVER, and the website, guildhallwealth.com. Let's review. Zimbabwe has converted to a gold standard, and the IMF says, hey, we like it. We're in favor of that. The Bureau of Labor Statistics doesn't like that coffee's gotten too expensive, so they said, we'll just take it out. So we don't have to count that anymore. Congress has decided to join many states who have wanted the same thing, to band together and put forth a bill to cancel CBDCs in the Federal Reserve and handcuff them from trying to pursue it. We've seen silver move from North America to Asia. They're doing it through an arbitrage. We believe, and we're not the only ones who believe, that this is a way for China to get the physical metal, and they make people think that they're making great decisions by taking advantage of the arbitrage, but meanwhile, who's ending up with the physical? Meanwhile, central banks continue to buy physical gold, and to the tune of billions and billions of dollars. And they're not the only ones. There are billionaires out there, Jerry, and multimillionaires, and people who the investment world really respects. People like Michael Burry, or John Paulson, or David Einhorn, or Ray Dalio. And what do they all have in common? They're all bullish on physical gold. Now, when we talk about where gold could go, there's lots of different projections out there. And I think it's a bit difficult to figure out exactly what that number's going to be, because if the dollar's worthless, gold is priceless. And so where do you go? It's somewhere in between. That's the framework. But you've got people like Jim Rickards, who thinks it can go to 27,000. Michael Oliver, who's been around since the 70s in that market, who does a newsletter and talks candidly about the markets. He thinks it can ease, just looking at something you've brought up on this show many times, the idea of past bull markets go up a certain amount, 5 times, 10 times, right? You've talked about this, Jerry. He looks at it and says, gold to go to $8,600, not a big deal in this type of environment. I think that as the market grows, people will become more bullish. And I think that what Michael Oliver was talking about is, he said that over the last 100 years, there's a percentage. Silver's always 2% of gold. Like you were talking about the ratio. The ratio. He brought this out, which I'd never heard before. He said it's a 2% thing, which that means that gold goes to 8,000, silver's going to $160 an ounce.
Conservatively, yeah.
And, look, at $50 silver, I think people will look at it and say, well, I've got stocks that are trading at 140. Silver looks cheap to that.
Exactly.
What's it going to take for silver to get to double my money from 50 to 100? It's still very easy. And it's even easier when it's trading at $30, $31, $32 an ounce.
Mm-hmm. The bullish case on both precious metals is on the table. The 2 previous cycles that we had, what Jim Rickards brings up, we had about 4 or 5 reasons for those cycles. It's a 10-year cycle. Both of those cycles, we saw gold move up on average about 1,400%. We're in the 3rd cycle. And in this 3rd cycle, we have a countless number of, well, actually, it's fixed. We have about 13 reasons plus. One of those reasons is this silver squeeze, Jeremy, that really revealed to the world, to the public, to silver investors, how the data has been skewed or ignored. The silver squeeze for peace is what we talked about a while ago with the help of John Forrest Lill and the Silver Academy. Really revealed how much silver is in demand. You talked about who's buying the silver, who's buying the gold. Well, the military. The military needs that silver for one missile, approximately 400 to 500 ounces per scud. Okay, and when we're talking about geopolitical, this is one of the fundamentals we're talking here at Guildhall. The biggest event, I think, what's happening in the news right now, geopolitically, is Taiwan and China. And Taiwan under China's permanent control was discussed in the UN this week. The United Nations once again says that it's a province of China, and China's, this is ultimately very bullish for silver. Understand that this is a region with a lot of demand for silver. And this week, after Taiwan's president, Tsai, raised defense spending to 2.2% of the GDP, it spent only a few hours to enforce a blockade of Taiwan. Taiwan intel did not even know in advance. China is circling Taiwan right now, and none of the Taiwan allies are showing up. The U.S. naval assets right now are actually moving away from Taiwan. There's nothing Taiwan can do. And isn't this amazing that we are seeing that? Can the U.S. even go to war when the silver prices are this high? We don't know if this is a factor, but we do know every single ounce, that is every ounce that goes up in value, it's putting pressure, downward pressure on the military industrial complex. And that's what I call silver squeeze for peace. If you really want peace, if you want to dismantle the military industrial complex control on silver, you're going to buy an ounce today.
Well, another way to exert control is through the debt, because right now they're spending more on servicing the debt in the U.S. than on military spending, which is something to consider. The debt is getting that big that it's becoming that much of a problem. You're going to have to fix it in a different way. There's always going to be geopolitical issues for sure. This could definitely heat up things in the market in that respect. But ultimately, we have projections in the market for where the market can go. We know these are early days. We know that we're in a bull market in precious metals and in a commodities boom as well. There's many different people, not just us, but many analysts in the market who see gold going into well beyond $5,000 an ounce. And it's becoming pretty obvious to everyone as well in the consensus that silver easily gets into triple digits over the next several years. So if you're thinking, have I missed it? Is it too late? No, this is the time to get started. 90% of the move happens in the last 10% of the market. Of course, 10% of the people will make 90% of the money. So when they say this isn't for everyone, it's not for everyone. Not everyone wants to make money. Not everyone wants the opportunity. Some people just say it's not paying attention, it's not for me, and they've got other things they want to do. But if you've been listening to the show and you like the fundamentals, you want to dip a toe in the water and start to understand how physical gold and silver works and the value, and how gold's gone up 500% in the last 20 years and how silver's up over 400% in the last 20 years, and it's just going to keep going, you give us a call. The number 1-877-8-SILVER, the website guildhallwealth.com. Own it direct, have it in a vault, or put it into your registered account. We want to thank everyone for joining us. Jerry, you brought it this week, buddy. That was amazing. So much great information. Hope all our listeners enjoyed it. If you missed a show, check us out on YouTube. Check us out on X. We're always communicating with our clients and communicating with everyone about the markets, and can't wait to speak to you next week here on The Real Money Show on 640 Toronto.